Hey, what's up? Edward here. So in this video today, I want to talk about the recent correction that happened a few days ago. Tesla was down 14%, Bitcoin was down 15%, Affirm was down about 10%, Palantir was also down 10%, and the list goes on. The reason behind the correction was a few things. First, investors were worried about a potential increase in interest rates and inflation, which is why the money printer himself, Jay Powell, eased the markets on Tuesday and Wednesday. Now, the second reason why there was a correction is because recently there has been a lot of euphoria in the stock market, and I have to say it is pretty astronomical. The valuations and stock prices were at record highs, especially with growth stocks, hence a correction. With all this news going around, investors decided to de-risk their portfolio and decided to secure some gains. Now that Chairman Powell said that the inflation is going to be soft and that interest rates will still remain low, the stock market reflected that news and bounced back up. Not only that, we will be seeing a stimulus bill being announced by February 26th, which inflates the prices of assets even more. February 23rd was a great day for investors to take advantage of the correction. However, I noticed that many investors were not prepared for this correction, so I'm going to be explaining what you should and shouldn't be doing when a correction happens. Sorry if this video is a bit late, but let's just dive right into it so that investors don't make the same mistake again. So as usual, I'll start with the first part of the video and I'll talk about the things you shouldn't be doing when there's a stock market crash or correction. The first and most obvious one is to not panic sell your stocks. Although many investors are aware of this, they still don't do it. If you cannot simply handle seeing your stocks going down 10 to 50%, then you shouldn't be in the stock market. These drops or corrections are actually healthy because stocks don't always just go up. It's always good to have a pullback in the stock market. This corrects the stock price to a healthier valuation, and we investors should be taking advantage of this. Now, the second mistake that I don't want you guys to do is to sell your stock at a loss and then hope that you can buy in at a cheaper price. I know that many investors tend to do this and think they can outsmart the market. However, this is not how it works. Imagine buying Tesla stock here and then you end up selling here for a loss because you think it'll go lower. If you didn't end up pulling the trigger at the very bottom, then you're simply buying back in where you sold it for. I've seen this time and time again, and I just wanted to let people know that we can't predict the future and that we should just be buying when it dips. Now, the third point that I want to make is that even though your favorite stocks went down in value, you must still understand the fundamentals and the valuations of the stock. If you don't know, let me show you a tweet from Justin O at a couple cents, and he explained it very well. He said that if you don't look at the valuations and fundamentals, it's like buying an expensive bottle of wine without knowing how good it is, who made it, and how much it should sell for. If you think that's smart, then I have some grape juice to sell you. I don't know about you, but I don't want any grape juice. I'm here to understand the fundamentals and valuation. Now, the last point that I want to make is that even though a stock dropped multiple percentages, doesn't mean that it's a buy. Some stocks are still overvalued even though there was a correction. Means that the stock was hella overextended. The higher the stock price rises, the harder they fall. So be aware of valuations because in the long term, it really does matter. Now, all these mistakes are just simply human behavior. But the best investors in the world are able to control the urge and sanity. The most important trait of an investor is the ability to control their emotions and just hodl. Just like the people that held GME and AMC. Shout out to all the people with diamond hands. Now I want to talk about the things that you should be doing when there's a market crash or a correction. First, take the opportunity to buy any stocks that you're interested in the first place. Have a target price set in your mind and make a limit order with your brokerage. Don't patiently wait and just look at the stock price falling down, because by the time you set an order, it's going to be way too late. Whoever got Tesla at about 227 per share, congratulations, you did your homework. For those that don't know, a limit order is when you buy a stock at a particular price at a particular amount. If that stock hits that price, your brokerage will automatically fill that order for you. Now, the second thing that we should be doing is having cash on hand. This is most likely one of the reasons why many investors couldn't take advantage of this correction. It's good to have about 10 to 20% in cash sitting in your brokerage account in case any deals comes along. We cannot predict when the stock market will correct itself, so it's always better to be prepared. I know that cash is trash, but once you deploy that cash into the stock market, it's not trash anymore. Now, the third point is kind of optional, but try to buy into stocks that you have the most conviction for. Don't settle for the 9th pick when you can settle for your first, second, or third pick. It's better to use this moment to buy into your favorite companies. This means your core positions should be your first choice. Obviously, make sure that the fundamentals and the valuations make sense before buying the stock. Now, the fourth thing that you should be doing is to dollar cost average average into your positions. If you bought a stock at its peak, try to buy it when it's lower. That way you're bringing down your cost basis. Example, imagine if you bought 6 Tesla stocks at about $780. During the correction, you bought 6 more shares at about $680. Now your cost basis is at $730 per share. Once the stock market recovers in the long term, the price of the stock should reach your cost basis sooner than at its peak. If you're a passive investor, I hope that you also dollar cost average into your ETFs, because this also applies to you. Now the last point that I really want to make is that you should be doing your own independent thinking and judgment. I cannot stress this one enough, but don't buy a stock just because someone else is doing it. Remember to stay focused on your own picks, your investing philosophy, and as well as your financial goals. Don't be a sheep and make your own thesis for your own picks. Understand why or what you're buying, or you're just simply gambling. Now I want to end this video with my thoughts. At the time I'm recording, it seems like the markets are slowly recovering again after Chairman Powell saved the day. However, we have to remember that interest rates are never going to be this low forever. For those that don't know, when interest rates are very low, the stock market appreciates in value and vice versa. Once the economy is back to normal, we should expect interest rates to go up again. During this correction, a lot of growth stocks took a big hit, mostly because majority of them are trading at a very rich valuation and they were definitely overvalued. All the dividend and value stocks remained relatively at the same price, such as Coca-Cola, P&G, Johnson & Johnson, Pepsi, McDonald's, and many others. This correction showed us which stocks were overvalued and which ones weren't. Now for me, during this correction, I deployed about 50% of my cash into the market. I bought 2 assets that I was eyeing very closely. I have some cash remaining on the sidelines just in case if there is another correction. Now I'm just loading up my cash position until better opportunities present itself. Every paycheck that I get is going straight into the cash position. At the end of the day, this video was here to provide value to everyone out there so that the next time this happens, you're all prepared. Remember to always have cash on the sidelines because we are not oracles. These opportunities don't last because the stock market goes up majority of the times. That wraps up for this video. Let me know what you guys think. Let me know what stocks you guys picked up during this correction. Let me know in the comment section down below. I'm very interested to see what you guys got. Thank you for watching and I'll see you all next time.
The market went down. When I ran Magellan on 13 years, the market went down 9 times, and every time the market went down, Magellan went down. I was 9 for 9, and you know, because it's very important. This is another one of these numbers you ought to write down. If you put $1,000 in a stock, all you can lose is 1,000. I've done that several times, and but if you're right, you can make 5,000, 10,000, 20,000. So this business, you don't have to be right 1 out of 2 times. You can be right 1 out of 4. As long as the times you're right, you know the company's doing well, you know they're doing a great job, and you add to it, or at least you don't sell it, which is a terrible tragedy. So you can make more money on the upside. So I just wrote those out, and I will now flip a coin to tell you where the market will go to 4,000 this year or next year. Heads means it goes up. It's a 2-headed coin. The market will go up in the next year.